Your June Social Security deposit may already be sitting in your account right now. And before you pay a single bill, before you move a single dollar, there are 5 specific things about this month that could completely change how much of that money you actually get to keep. The hardest part? Most seniors never hear about any of these things until after the damage has already been done. I'm Nancy, and today I want to walk you through all 5, because what you do not know right now can cost you real money in the weeks and months ahead. Some people are going to look at their June deposit and immediately think the bank made an error. The number will look off. It will not match what they were expecting. It was not the bank. Some people are going to see 2 separate deposits arrive in their account within the same month and assume Social Security sent them a bonus. They did not. Some people have money waiting for them right now inside a state-level program that has absolutely nothing to do with Social Security, the money they are fully entitled to, with a hard cutoff deadline at the end of this very month. And if they miss that deadline, they wait another full year. And some people are going to spend their entire June deposit today without understanding that one financial decision made this month could quietly trigger a Medicare complication or an unexpected tax bill 6 months down the road. June 2026 comes with its own specific set of rules, calendar quirks, and program deadlines. And they affect seniors age 62 and older in very different ways, depending on your state, your benefit type, and what actions you choose to take or not take over the next few weeks. That is exactly what we are going to cover today, one by one. Before we dive in, go ahead and subscribe right now and turn on the bell notification. Payment dates, Medicare premiums, SSI schedules, and state benefit deadlines shift regularly. Nobody sends you a clear, plain English explanation before those changes hit your deposit. That is the entire purpose of this channel. Subscribe so you are never the last person to find out when something changes. Let us walk through all 5. Number 1, verify the actual number in your deposit. The first thing to do before anything else is confirm that the dollar amount sitting in your account is actually correct. Here is some useful context. The average Social Security retirement benefit for retired workers in 2026 is just over $2,000 per month. Following the 2026 cost of living adjustment, known as the COLA, the Social Security Administration estimated the average monthly benefit at approximately $2,071 for retired workers. That is the average. Your personal benefit will differ based on your individual earnings history, the age at which you first claimed benefits, and whether you are collecting on your own work record or on a spouse's record. Here is what most people genuinely do not know. The maximum possible benefit in 2026 varies quite dramatically depending on when you originally filed. If you claimed at age 62, the earliest age the program allows, the maximum monthly benefit in 2026 is $2,969. If you waited until your full retirement age of 67, that maximum climbs to $3,880 per month. And if you held off all the way until age 70, the point at which delayed retirement credits stop building, the maximum reaches $5,108 per month. Think about that for a moment. The difference between filing at 62 and waiting until 70 is more than $2,100 per month, every single month, for the rest of your life. Now, most people are not collecting anywhere near those maximum amounts, and that is completely normal. The real point here is this: if your deposit looks different from what you were expecting, lower than you thought it should be, or simply not matching the number you have been receiving, your very first step should be to log into your My Social Security account at SSA.gov and review your personal statement. Inside that statement, you will find a year-by-year breakdown of the earnings that Social Security has on file for your entire working life. Compare those numbers carefully against your own records, your old W-2s, past tax returns, anything you still have. Errors at the SSA do occur. And here is why this matters so much. Depending on your full 35-year earnings history, even a single year recorded incorrectly can permanently reduce your monthly benefit for every month that remains in your retirement. One wrong number on one line, dragging down your check indefinitely. Reviewing your earnings history is not just a box to check. It is genuine, meaningful financial protection. Confirm that your number is correct, then move on to the second thing. Number 2, the deduction that already happened before your money arrived. The second thing involves a deduction that a large portion of Social Security recipients forget is already removed before their deposit ever hits their bank account. Back in January 2026, every Social Security retirement recipient received a 2.8% cost of living adjustment. For the average retiree, that translated to roughly $56 more per month. That was real money, and it was genuinely welcome. But something else also changed in January at the exact same time. Medicare Part B premiums increased from $185 per month in 2025 to $185 per month in 2026, an increase of $17.90 per month. This is where the confusion begins for a lot of people. That increase does not arrive as a separate invoice in your mailbox. For the majority of Social Security recipients, the Medicare Part B premium is automatically deducted directly from your benefit before the deposit ever reaches your account. You never see the subtraction happen. The money simply is not there when the deposit lands. So here is what the actual math looks like for a typical retired worker. The COLA added approximately $56 per month. Medicare then took an additional $17.90 before that deposit arrived. The real take-home increase was closer to $38 per month, not the full $56 that was announced and celebrated. Across a full year, that extra $17.90 per month adds up to $214.80 in reduced purchasing power. For someone living on a fixed income, that is not a trivial rounding error. That is real money. If your June deposit looks noticeably smaller than you expected based on the COLA announcement, this automatic deduction is one of the most frequent explanations. It is not a mistake. It is not a bank problem. It is the system doing exactly what it was designed to do, just in a way that is largely invisible to the person receiving the benefit. The only way to eliminate or offset that Part B deduction is to qualify for a Medicare savings program, which can cover that premium on your behalf if your income and resources fall within certain limits. If your income is on the lower end, it is absolutely worth a few minutes of your time to look into it. Visit Medicare.gov or reach out to your state's SHIP program, that stands for State Health Insurance Assistance Program, and ask whether you qualify. There are people right now who meet every requirement for this assistance and have never applied simply because no one told them the program existed. Number 3, 2 deposits in July, and why the second one is not a bonus. The third thing is something that causes unnecessary panic every single time it happens, but only for people who were never given a heads up about what is actually going on. This one applies specifically to SSI recipients, people who receive supplemental security income. If SSI does not apply to you personally, keep this section in mind anyway. There may be someone in your life, a family member, a neighbor, a friend, who does receive SSI and who is going to be very confused in a few weeks. In June 2026, the SSI payment was deposited on June 1st. That is the standard schedule. One payment, one date, nothing unusual. Now look ahead to July. In July 2026, SSI recipients will receive 2 separate deposits. The first arrives on July 1st. That is the regular July payment, right on schedule. The second deposit arrives on July 31st. And this is precisely the moment when the phone calls start, when people head to the bank convinced something went wrong, when panic sets in. That second deposit on July 31st is not a bonus. It is not extra money. It is not an error that needs to be reported or returned. It is your August payment arriving ahead of schedule. Here is why. August 1st, 2026 falls on a Saturday. When a scheduled SSI payment date lands on a weekend or a federal holiday, Social Security's policy is to send that payment on the last business day before it. Since August 1st is a Saturday, the August payment goes out on July 31st instead. 2 deposits land in July, 0 deposits land in August. The total amount of money you receive across the entire calendar year is exactly the same. Not a single dollar more, not a single dollar less. The calendar simply bunches 2 consecutive months of payments together and then leaves the following month without a deposit. Both of those checks are absolutely and legitimately yours. Spend them both freely, but spend them both carefully. Treating that second July deposit as unexpected bonus money and spending it today only to find your account completely empty when August arrives with no deposit is a real financial hardship that plays out for SSI recipients every time this calendar situation occurs. This is not bonus money. This is next month's living expenses arriving a few weeks early. Please plan accordingly. And if you know someone who receives SSI, a parent, a sibling, a neighbor, and they are going to see 2 deposits show up in July, please tell them about this right now, before July gets here. One simple heads up could prevent a genuinely difficult situation in August. Number 4, state money that has nothing to do with Social Security, with a deadline. This month, the 4th thing has no direct connection to Social Security or the federal government, but it may be putting money directly into the hands of seniors right now, and many of them have no idea it exists. Several states across the country are currently distributing property tax relief payments aimed specifically at older residents. These come either as direct cash payments or as credits that reimburse a portion of your annual property tax bill. These programs are entirely state-funded, entirely separate from anything federal, and designed specifically for older homeowners and renters living on fixed incomes. Let me walk through 3 specific examples. Pennsylvania runs a property tax rebate program that distributes payments between June and July each year. Eligible homeowners who are 65 or older with household income under $45,000 may qualify for rebates of up to $1,000. The application deadline for 2026, based on your 2025 taxes, is June 30th. If you are a Pennsylvania resident and have not yet applied, you have until the end of this month and nothing more. Applications are available through the Pennsylvania Department of Revenue website. You can find it by searching Pennsylvania Property Tax Rebate or through any area agency on aging near you. New Jersey's Anchor program offers benefits of up to $1,500 for eligible homeowners and up to $700 for eligible renters. Payments go out on a rolling basis, and many recipients receive them during the summer months. If you have already submitted your Anchor application and are waiting, your payment may be arriving in June or July. If you have not yet applied and you own or rent property in New Jersey, the application window is still open. Check the New Jersey Division of Taxation website for full eligibility details. New York's STAR program provides either a direct check or an upfront reduction on the school tax portion of your property tax bill. The enhanced STAR benefit, designed specifically for seniors aged 65 or older with income under $98,700, offers a larger reduction than the standard version. Payments and credits from New York's program generally arrive in the fall, but June is exactly the time of year when many seniors realize they should be enrolled in Enhanced STAR and currently are not. If that describes you, now is the time to look into it. These 3 states are simply illustrations of what is out there. The majority of states have some form of senior property tax relief program on the books. They carry different names, different income limits, different deadlines, and different application processes. Some require you to reapply every single year, which means missing 1 year is not just inconvenient, it means losing that year's money entirely. Your action step here is simple. Search your state name followed by the phrase Senior Property Tax Relief 2026. Find out what programs exist in your state, whether you are already enrolled, and whether any deadlines are approaching or have already passed. A 5-minute search today could put meaningful money back in your pocket, money you earned the right to through your taxes, your property, and your years of contribution to your community. Missing a June 30th deadline means waiting another full year. That is not a technicality. That is real money left uncollected. Not out of carelessness, but simply because no one ever sat down and explained that the program existed in the first place. Number 5, the summer withdrawal that could cost you next April. The fifth thing is the one that works the slowest and does the most quiet damage, because you will not feel the consequences until months from now, long after the decision that caused them has already been made. This applies to anyone who takes withdrawals from a traditional IRA, a 401k, a 403b, or any other tax-deferred retirement account. If that does not describe your financial situation, stay with me anyway. This also affects Social Security recipients who have any additional income sources beyond their monthly benefit. Here is the underlying issue. If your total income in 2026 crosses certain thresholds, a portion of your Social Security benefit becomes subject to federal income tax. Specifically, if your combined income falls between $25,000 and $34,000 as an individual filer, up to 50% of your Social Security benefit may be taxable. If your combined income exceeds $34,000 as an individual, up to 85% of your benefit may become taxable. For married couples filing jointly, those same thresholds are $32,000 and $44,000 respectively. For this calculation, combined income means your adjusted gross income, plus any tax-exempt interest, plus half of your total Social Security benefit for the year. Now, here is why June specifically matters. A lot of people take money out of their retirement accounts during the summer to pay for a vacation they have been putting off, a home repair that cannot wait, an unexpected expense that came out of nowhere. One withdrawal made in June can be enough to push your total annual combined income past one of those thresholds, which means when you file your return next April, a larger portion of your Social Security benefit is suddenly taxable. You will not feel that consequence today. You will not feel it in July or August. You will feel it next spring when your tax bill arrives, and the number does not make sense until someone explains that a decision you made back in June is what caused it. This is not a reason to stop using your retirement accounts. They are there for you, and you have every right to use them. It is simply a reason to know exactly where you stand before you make any significant move. If you are already close to one of those income thresholds, take 15 minutes and have a conversation with your tax preparer before making a withdrawal this summer. That brief conversation now is worth far more than an unpleasant discovery next April. The same principle applies to required minimum distributions, RMDs. If you are 73 or older, federal law requires you to take a minimum distribution from your traditional retirement accounts each year. RMDs count as ordinary income, and they can affect both the taxable portion of your Social Security benefit and your Medicare IRMAA surcharge. IRMAA is the income-related monthly adjustment amount. It is the elevated Part B or Part D premium that kicks in when your income exceeds certain levels. If your 2024 income was higher than usual due to a large withdrawal, a property sale, or any other one-time financial event, your 2026 Medicare premium may already be reflecting that elevated income. If you are currently paying more than the standard Part B premium each month, review your Medicare IRMAA determination notice. If your 2024 income spike was genuinely a one-time outlier, you may have grounds to appeal that surcharge using Form SSA 44, available directly at SSA.gov. The complete June 2026 picture. All 5 in one place. Let me bring all 5 together so you have the full picture in one place before you do anything with your deposit. The average Social Security retirement benefit for retired workers in 2026 is just over $2,000 per month, with the SSA estimating the post-COLA average at approximately $2,071. The maximum benefit ranges from $2,969 if you claimed at age 62 all the way to $5,108 if you delayed until age 70. If your deposit looks smaller than you expected, one of the most common causes is the 2026 Medicare Part B premium of $185 per month, deducted automatically before your money ever reaches the bank. Most people never see the deduction happen. They simply receive a number, that does not match their expectations and have no idea where the difference went. SSI recipients received one standard payment on June 1st. In July, 2 deposits will arrive, July 1st and July 31st. The second one on July 31st is your August payment arriving early because August 1st falls on a Saturday. It is not a bonus. It is not extra money sent by mistake. It is next month's income showing up ahead of schedule. Do not spend it as though it were unexpected funds. If you are 65 or older and you own or rent a home, look up your state's Senior Property Tax Relief Program today, before the end of June. Pennsylvania's deadline is June 30th. New Jersey and New York both have active programs with payments currently being distributed. Most states have something in place, and a 5-minute search is all it takes to find out what you may be entitled to. And if you have any retirement account withdrawals planned for this summer, review your combined income picture with your tax preparer before moving forward. One withdrawal made in June can create a tax situation you will not discover until next April. And by then, the decision is already irreversible. Your action steps. Right now. This week. Here is exactly what to do. 1. Log into SSA.gov and verify that your earnings history on file is accurate. Compare it against your own records. Flag any years where the number looks wrong. 2. Compare your actual bank deposit against your Social Security award notice and look specifically for the Part B premium deduction line. Understand what was removed before the money arrived. 3. If you receive SSI, take out a calendar right now and write August payment, do not spend, next to July 31st. Mark it clearly so there is no confusion when that second deposit lands. 4. Search your state name plus Senior Property Tax Relief 2026 and do it before June 30th, especially if you are in Pennsylvania. Do not let a deadline slip by simply because you did not know it was there. 5. If you have any retirement account withdrawals planned between now and September, sit down with your tax preparer first. Know your combined income number and where you stand relative to the Social Security taxation thresholds. Please share this video with someone in your life who receives Social Security. One confusing payment date or one missed state program deadline can cause genuine stress for a person living on a fixed income. Sharing this takes about 30 seconds and could spare someone you love from a real and preventable problem. And drop a comment below. Tell me what state you are in. If enough viewers ask about the same state, I will put together a dedicated breakdown covering every senior benefit program available there, including exact income limits, deadlines, and step-by-step application instructions. Subscribe to Senior USA Hub for more updates, and make sure the notification bell is turned on so the next one finds you. End of script.